Hi everybody, welcome to Decode Australia. Today is Wednesday, November the 25th of 2020. My name is Tamer.
And I'm Laura.
And we're going to be starting with the pound-yen analysis.
The Great Britain pound inched higher against the Japanese yen, increasing the price of the pound-yen pair to more than 139.00, ahead of the release of UK Market Manufacturing PMI news. The technical bias remained bullish since the pound-yen pair printed a higher low in the recent downside move, as shown in the daily chart below.
Okay, so this pair is currently strengthening around the 139.51. Looking at the chart, we're going to come across the following resistance levels. Resistance 1 is 139.81, which is the upper trend line R. Second resistance is at 140.17, which is the 23.6 Fibonacci level. Finally, the third resistance is at 141.00, which is a psychological number.
On the downside, the price of the pound yen might find some significant support near the listed price tag, helping the pair to sustain around. At support 1, it will be 138.58, which is the 23.6% Fibonacci retracement. At support 2, we'll be facing 137.81, which is the low of November 23rd, 2020. At support 3, we'll be facing 137.33, which is the major horizontal support level. The technical bias remains bullish as long as 138.58. The key support level remain intact.
Now we need to keep an eye out for the UK Market Manufacturing PMI news. And the Chartered Institute of Purchasing and Supply and Market Economics anticipates releasing stats for the UK Market Manufacturing PMI news on next Tuesday, December the 1st. So according to economists' view, the GBP Market Manufacturing PMI reached a reading of 55.2 in November, bearing no change as compared to a reading of 55.2 in the previous month.
The stats for the UK Market Manufacturing PMI reflects the overall economic condition of the manufacturing sectors of the United Kingdom. It is worth mentioning here that the market manufacturing sector has more importance as compared to the service sector of the UK, as far as GDP is concerned.
So the market services PMI doesn't affect the country's GDP either positively or negatively, whereas the manufacturing sector does. Therefore, it is considered an important economic indicator.
Generally speaking, reading above 50 indicates expansion in the country's economy and hence suggests a bullish market for the pound yen ahead and vice versa.
So in conclusion, given the price movement of this pair over the past few days, buying it around the current levels might yield some profits in the short to medium term trading. And now let's move on to the Aussie USD analysis.
The Australian dollar skyrocketed against the US dollar on Wednesday, increasing the price of the AUD USD pair to more than 0.7300, ahead of the release of Australian quarterly gross domestic product news.
Now, the Aussie USD is currently trading around the 73.63 level. Once again, we're looking at the chart, we can see the following resistance levels which may prove difficult to overcome. At resistance 1 is at 74.02, which is the upper trend line arm. Second resistance is at 74.12, which is a major horizontal resistance level. And finally, the third resistance is the 75 cents as a psychological level.
On the downside, the price of the pair might find some support near the given below price tag. These support levels might prevent the price from decreasing below the set prices. At support 1, we'll be facing 0.7275, which is the 23.6% media Fibonacci retracement. At support 2, we'll be facing 0.7247, which is the low of September 11, 2020. At support 3, it will be a 0.7191, which is the key horizontal support level.
So we need to look out for the Australian gross domestic product news for this pair. And the Australian Bureau of Statistics is set to release numbers concerning the AUD GDP news on next Wednesday, I should say, so December the 2nd. And according to economists' consensus, the Australian GDP reached a reading of negative 7.8% in the third quarter this year, as compared to a reading of negative 7% in the previous quarter.
The stats for Australian gross domestic product news reflects the monetary value of all products, including goods and services, produced inside Australia. The GDP is considered an important measure to gauge the economic health of the country. It does not only tell about the expected inflation rate, but predict consumer spending patterns in the coming days as well.
Generally speaking, a high reading is seen as a positive for the Aussie US, and which suggests a bullish market for the pair ahead and vice versa.
In conclusion, considering the overall economic outlook of the pair over the past few days, buying the pair around current level might be a sensible move in short to medium term trading.
And as always, trade with your head, not your heart. Only trade with what you can afford to lose, and always apply strict money and risk management techniques.
Please don't forget to follow us on our Facebook page, YouTube channel, and our Instagram. There's a lot for us to teach.
Thanks for watching. See you tomorrow.
Thank you. See you.